the NBI.com. This is John. This report is for the 19th. A happy birthday to my daughter, Grace. I will be tied up taking care of her, making her thrilled with the 16th year of her existence here. Almost the market down 16% for the year, but it's actually off 18%. Oh, well, it was close. Anyway, regardless of all those details, it's becoming more apparent that the dichotomy between government numbers versus what some of the private sector numbers have been indicating as far as what's going on in the economy vary greatly, and I think some traders are becoming a little more leery of the prospects for the coming year, given the fact that the Fed likely is not going to buck what it's doing, and for good reason. They have to remove a lot of that excess liquidity that they created, and some inflation is actually the easiest way to do it. There's still no resolution, though, as to the budgetary issues. Will a Republican Congress and that whole battle between uh, the two parties resolve itself with limited spending and reduced deficits? Unlikely, but it's possible. With the white MBI leading, we expect it to move down to the 50%. Now, from here becomes critical because as we're looking at it now, there's nothing in here indicating here that they're going to support at the 50% line. Uh, we got falling MBI Magenta as well as Cyan now taking over the lead beyond the DOC green right there. And you can see red has also rolled over. So a lot of ominous signs, but again, this gets back to this single bar move that took place back here at the beginning of November from that CPI report that surprised. But at the end of the day, filling back half to three quarters of that is not an unusual thing. So literally, we're at the halfway point of it. But poor Santa rally really was short lived. I mean, literally, uh, maybe a day or so. But hey, it happens. You can see from the NQ all the way down to 38%. So that's kind of the Q right there. It would look to me as though the Nasdaq would reach our 23% long before the S&P even gets to the 38. So clearly weakness in tech, and that has been a major drag overall. Treasuries should be coming down a lot more, but this is an indication the bond market believes that the Fed is going to have to ease, and relatively soon. Now, the surprise comes if that doesn't happen, uh, rates have to rise, and so TLT should be falling. So it's interesting the divergence the bond market has to what the Fed has indicated. Oil staying in a relatively soft area here. This is not bad. It's high enough that it does suck up a lot of free cash, but not so high that it's crippling. Definitely absorbable at this particular point, given the fact that we had such a long period of accelerated pricing over the 80s. So people are seeing a discount relative to what it was. Is that enough to sustain things with the higher rate, the slowdown in housing that's going to take place? Of course, you're entering winter months where they make seasonal adjustments on things, and you expect real estate and stuff like that to be a little bit slower. But um, will it become problematic? That really becomes the major issue going into the start of the year, especially until spring hits. So some of the softness could be written off as seasonal, but we'll see if that inflation impact that took place during a prime building period will be able to be absorbed, or whether it will cause serious problems within the real estate community, and that has broad implications all the way through the economy and everything that takes place. So it's definitely something to be paying attention to. Of course, the euro continuing to jump on the no action taking place from the Russia-Ukraine situation, and the fact that the U.S. provided all that liquidity as far as dollars, so they're not in major desperate need of it, and that has helped things quite a bit. Bitcoin still had to brief period of enthusiasm, but couldn't sustain any of it. And we moved down to negative shakeout here again. And the key question here will be whether there's a turnaround before we get to the 0%. And then potentially you would have consecutively higher builds of red DOC, which would be enough to support it. But I think there's just serious headwinds with the scandal situations and just a lot of skepticism. And you see the same thing with ETH, even worse. It's fared far poorer and well below its 23%. Not expecting any special turnaround for any of those. And you can see from a 50K standpoint, it just filled everything back, and we've just been in a straight down boom. Um, Started off with a decent potential setup there when the green rose. That only lasted a bar, and that's just because red finally overtook magenta there, and then white spike right above at the peak, just below the 23%. And when that happens, it's rarely good news as we move lower. So that puts the downside there all the way at the 55 level, 30 at 55. So worth noting. Intraday was pretty clean. It started in the pre-market action from Europe, and again, same algo levels from before, and you can see how slight trade above them and then below, and then seems to be more supply going, but we expect it all the way down at that lower 3850 number. Um, Definitely possible, if not more than likely, as we came across there was some late day buying, but sold off pretty darn quick. So this algo level at the 3860, is that exactly 3860.94 there. Below that, there's quite a range, and we don't have anything sub that other than our bigger time frames to rely on. So uh, definitely it's just going to be one of those watching. I think when we open up Asia, whether or not we get a spike of the magenta from the open. Otherwise, the expectation would be to move all the way down to that algo. Effectively, we're already near the 0%, but that's coming off of the elevation there. So that would be the natural draw because that's where we had support last time, and that would become a critical element. So it's going to be an exciting prelude coming up to Christmas week. Not a whole lot of time for bulls to turn around, and literally that's really the accurate statement of it because this had not been anything related to short activity, and that's part of the problem because when it requires just bulls to keep things moving, makes it a lot tougher. You need those short cover rallies that we had all through the summer and before that really propelled things beyond where they should have been. Something we had talked about. Uh, Too many people directionally traded one side, and it made it easy to counterplay them. Now, you get a lot of people moving to the sideline, which explains a lot of what we saw in TLT, where people just moved to Treasury safety, which is losing proposition given interest rates versus inflation rate. It's a negative return, but that's been the case for some time. So it's a little bit better than it had been, but nothing worth talking about. As always, though, I will continue to update you. Probably won't be around much. Special birthday dinner and that for Grace, and but after that, we'll be back at it. As always, though, trade well. We'll talk to you later.